So today I'm going to talk about why I sold this stock, and in particular I'm going to talk about something that I did which was a bit of a mistake. I feel like I could have actually made more money from this investment than what I did, and for me talking about this and sharing this with you, hopefully it avoids you from making a similar mistake as well. And like I said, I did make some money, I collected some really good dividends. However, I feel like I could have even taken more share price appreciation from this investment. So we'll have a look at this one today. Now I am going to say, just on yesterday's video I talked about Cineworld, and I was talking about if that's a buy or if they're heading for bankruptcy. I did say that I think it's not a buy. I think they are unfortunately heading for bankruptcy. I thought that would be in probably 6 to 12 months time. It has, however, came out today that they are filing for bankruptcy and the administrators are coming in. That was a lot quicker than what I thought, because when you looked at the trading update from a few days ago, it did sound like they are just starting to explore extra ways of getting capital because they needed it, otherwise they are going to go bankrupt. But that cash burn must have been very extreme, more than what was suggested in that trading update, and also how quick they needed liquidity was really hidden as well in that trading update. That's why you've also got, always got to read into what management is saying and take a pinch of salt. In that trading update they tried to make it sound like they were okay. You're looking at that balance sheet, and that's a lesson on why balance sheets are so key. You're looking at that balance sheet and going, this is quite an awful situation here, and unfortunately it's not worked out, but that's why you want to be staying away from them companies like we talked about yesterday. But anyway, getting stuck on today's video on why I sold this stock, and also a little bit of a lesson for you guys that you don't copy this mistake that I made. So let's take a look. So a few days ago we made a video talking about Boohoo and Revolution Beauty, and in that video you could see here that I did sell my 888 holdings position, which we're going to talk about. I did buy Flutter and Revolution Beauty, which I was going to mention today actually, but I thought I'd just say that for another day. And Revolution Beauty actually had some more news out today as well, which I think probably be worth its own video. So let me know if you do want to see them two new stocks that I did replace this one with. But the company I did sell was 888 Holdings. I did make some profit, I did collect some dividends. However, as you can see here, I did buy around the CV times, and I was up a crazy amount at one point, and that has pulled back massively. Now that reason for the pullback has been because we are in a bear market. Also, this kind of whole sector, this kind of online sports betting sector, has been absolutely destroyed. Whether it's DraftKings, Entain, a lot of them have been killed off, so that hasn't helped. But even with both of those things considered, I do generally think I could have walked away with a bit more money than what I did do within this investment. So what was the mistake that I made in this investment? Well, first of all, why did I buy 888 Holdings? I bought it because it's an online sports betting business or casinos, and I like that space. I think online is the growth area. I don't like physical locations, and in particular I like this side of the US growth. I think US growth in this space is going to be huge in the next few years. That's why I basically did, as you can see here, replace 888 with Flutter, because they have the US growth with FanDuel. And between having DraftKings and FanDuel, I think I'm in a really good place for that US growth in the next few years. But I still think 888 was going to do very well from its online part of the business that it has, and I thought they would be just a small grower, kind of 4 or 5% a year, and they'll do quite well as a business. So I thought I'm going to hold this here, and it was also at a pretty good valuation. Now, one of the key things with an investment is your management team. Your management team can make or break an investment, and I've said this plenty of times on videos before. They're probably the most key thing for an investment, because at the end of the day, when you make your investment into your business or into a company, who is going to be the day-to-day decision makers of how that business does, and more importantly how successful it is? They're running the business you're invested in. It's the management team. Management are key. They are going to make sure, or they will be the biggest factor in if that investment is going to do well or poorly, and that's going to be based on their decisions. And that's why you've always got to assess management teams, question, are they making the right decision here? And with 888, I was very happy with this management team until a year ago, and then they made a decision or an investment and a buyout of a company that just absolutely blew my mind. And at the time I was looking at this decision, and I was like, this is a terrible decision, and I knew it was, and I knew the management team was making a poor decision here, and I didn't react to it, and I should have done. If I reacted to it, my gut was telling me this is a bad decision, and I didn't react to it, and I would have walked away with more percentage gain if I knew that was going to happen. If I believed my gut, I would have walked away with more of a gain than if I just let it ride. Now what happened here is that a company called Caesars completed the 2.9 billion acquisition of William Hill, which is fair enough. William Hill has a lot of online growth in the US. You can see why Caesars wants that. But Caesars said, we're not really bothered about every other part of the business, and who can blame them? Who would want the EU part of the business where the market's really condensed, competitive? William Hill has a lot of physical locations, and not to try and offend anyone here, but I generally think, online betting stores are very out of date. They're not very attractive, not attractive to go into. They're not in, I would say, attractive locations. I think the younger generations coming through are more bothered about online. They don't want to go into a physical location. It's that part of the business I think is a horrible part of the business, but I can see why they wanted the US part of the business. So I see Caesars what they're doing here, and then they come out with saying they're going to offload the EU part of the business with the horrible physical locations and more of the condensed market in the EU. And so I thought, okay, I can understand why they want to offload that. And the next thing I know, who is linked with buying it? The business that I own, 888 Holdings. And I'm thinking, listen, you've always been an online player. You're good at it. You've got obviously more in the EU side of it, which is fine because you're online. Focus a little bit on potentially that US growth. And they're not even picking up the US growth. They're just picking the EU growth up. They're picking the awful physical locations up when they've always been an online business. The physical locations which are going to have lower margins as well. And I'm just looking at AA going, why are you acquiring this? This does not fit your business model. And it's also a very poor market to be entering in. And they bought it off Caesars. And then what was the other terrible thing about this investment is that they paid 1.9 billion for this acquisition. Now, considering Caesars bought William Hill for 2.9 billion, and they got the fast growing part of the business, the best part of the business, and they then went to go buy it off Caesars, who they know want to sell off the other part of the business, and then they paid 2 billion still for it, was beyond me. So they bought the horrible part of the business, and then they overpaid for it. And then I'm looking at the management team going, this is just awful decisions being made here. And then there was a third decision that once again was a horrible decision to be making as a management team. So they overpaid for this dead part of the business. What did that also lead to do? Well, they diluted shareholders, and also to top it off, they ended up cancelling their dividend because of the acquisition. So one thing for me personally is that I had this business, it was a decent valuation, it was online only, good margins, good profit, and it pays a lovely dividend. It now dilutes shareholders, it acquires a dead part of the business, which has recently impacted the financials if you look at the recent financials. And that really nice dividend that I was getting, which I think was something like 5% for me, I was getting a 5% dividend yield, that was then cancelled. And just from all of this here that was going on, this, when it cancelled the dividend, you can see was the 9th of March 2022. So if we go to the 9th of March 2022 here, I know by then it had already fallen off a little bit. I can't find the 9th, let's just go from the 11th. But it still fell down 23%, and I would have still walked away with a little bit more of a share price appreciation than what I did already with. Obviously, it was already impacted because of the bear market and the sell-off in the sports betting industry. But this was still another nail in the coffin that I didn't like, and I should have reacted to it a little bit quicker. So the whole point of this video here is that you've making sure you're questioning the management team's reaction, what the management team are doing. And if you ever see them doing something, if you ever see them making a decision and you're not happy with it, that should be sending alarm bells off in your head. And for me, this was a business that I was invested in. I saw the first, one of the first big errors here, or two big errors, which was acquiring a dead part of the business, not acquiring the US growth, and then overpaying for it. And then just to top it off, I then saw them make another bad decision, which was then to cancel the dividend, and once again still not reacting to it. So this is something where I did sell and I did walk away with a profit, and I did have a few dividends that I collected, but I just wasn't quick enough reacting to my gut telling me that the management are not helping me out as a shareholder and making the right decisions for me here. And yeah, I thought I'd share that one with you guys. So I hope you enjoyed the video talking about this and hopefully helping you with making some, or avoiding making some mistakes going forward. And this is also why I sold this stock, and I thought it'd be really good to share it with you guys. But yeah, that's something that I did. I moved it into Flutter, which I think is a lot better business than 888 now. And I also think think the US growth is where you want to be, and Flutter definitely have that with FanDuel. Don't know if Flutter's worth a video on its own, and also a little bit more of cash put into a bit more, well, my highest risk UK position, which is Revolution Beauty, which don't know if you guys want to see a video on that one as well at some point. I was going to fit it all in today, but already with this being like 10 minutes long, I thought that would push it to a good 20-30 minutes, and I thought we'll just save that for another day if you guys want to see that. But anyway, that's the video for today. I might make a video on the weekend, we'll see what happens. If not, I'll see you on Monday, and if you're on the Patreon, I'll drop one more exclusive video on there across the weekend as well. So yeah, we'll see what happens. If I don't see you on Monday, have a great weekend, and yeah, catch you in a bit.